commerce. Hope you all are doing well. So in today's lecture, we are going to discuss about the continuation of IAS 16 regarding the depreciation of tangible fixed assets. So whosoever does not know what is tangible fixed asset, they can watch our previous video in the I tab. Now, what is depreciation? Depreciation means decline in the value of fixed tangible assets due to wear and tear. Now, what does this wear and tear means? Wear and tear does not mean if the asset is damaged or it has declined in value due to any of the reason like damages. So, not like this, but declining the value just because of its nature. If the asset is made up of any of the wood item or any of the steel item, they will lose their value according to their nature. So declining the value just because of this is called depreciation. Now, the depreciation is calculated in these of the 5 methods. Number 1 is a straight line method. We should discuss it in detail. Number 2 is diminishing, reducing balance method, which we'll cover it in the same video. Then working hour method. Number 4 is unit production method, and number 5 is sum of the years digit method. Now let us move forward and discuss about what is the straight line method and how the depreciation under this is calculated. Okay, so firstly we are going to discuss about the straight line method and how to calculate the depreciation under the straight line method. What is the formula? Formula is cost minus salvage value divided by total useful life in years. Now, everyone knows what is cost and total useful life in years. And whosoever does not know how to calculate the cost of an asset, they can watch our previous video where we have discussed about calculation of cost of an asset. Now, what is salvage value? Salvage value is also known as scrap or residual value. Now, this means the value which is left over at the end of total useful life of an asset. Means if you have purchased an asset for 5 lakh, so it does not mean that at the end of the total useful life, for example, 5 years, at the end of total useful life, its value should be 0. You can sell that asset in the scrap as well. So while selling that asset in the scrap, you will get a nominal amount, but you will get an amount. So that amount should be considered as the salvage value of the same asset. Now let us calculate the depreciation under this method. Okay, so let us discuss about how to calculate the depreciation while using the straight line method. Assuming we have the cost of the asset 800,000 and the salvage value of 80,000, and the useful life of 4 years, purchase date we have 30th June, and year end of the company's account is 31st December. Now, how to calculate this while using the straight line method? We have the formula of cost minus salvage value divided by total useful life. We have the cost of 800,000 and the salvage value of 80,000 and the total useful life of 4 years. So this factor is called depreciable cost, the cost which has to be depreciated over the total useful life of the asset. Then by dividing it by 4, we should get 1,80,000. Now, by multiplying it with 6 and divided by 12, we should get 90,000. Now, this 90,000 represents 6 months depreciation. Now, coming to the second year, we shall finish this factor. Why is it so? Because by calculating this depreciation, we are standing on 31st December. Now we have to calculate the whole year's depreciation from January 1st till 31st December. So this figure shall be changed in the next year as 180,000 per year's depreciation. And this will be so in year 2 and 3 as well. So this was all about straight line method. Okay, so diminishing balance method. So for calculating the depreciation under diminishing balance method, we have formula book value multiplied by rate. Now, how to calculate the book value? Book value means the value which is written for the time being in our accounts. Means cost minus the total depreciation till the time we are making the accounts. Means if we are standing on second year, at the end of the second year, so we have to deduct the depreciation of 2 years from the cost, and we should get the book value of the same year. And by multiplying that book value with the rate, we should get the depreciation for the current year. Now, how to calculate this? Let us see. Okay, so here we have a question for calculating the depreciation under diminishing balance method. We have cost of 100,000, rate of depreciation is 10%, date of purchase is 1st October, and the company's year end is 31st December. Now, how to calculate this? Firstly, on year 1, we have to have the book value. Why am I deducting 0 from 100,000? Because to consider this thing, that we calculate depreciation at the end of the year. But here, we haven't have calculated the depreciation because year is about to end, not ended yet. Okay. So on year 1, we have book value 100,000 minus 0. Why am I deducting 0 from 100,000? Do consider this thing that we calculate depreciation at the end of 1 year. So here, the year has not been ended, but about to end. So, we do not have calculated any of the depreciation of our asset. Therefore, I am deducting 0 in the year 1 and multiplying it by 10%. And as we purchase this machine on 1st October, so I have to make a factor of the years to the months. So, these 3 months divided by 12 shall be 0.25 of the year. And this shall be the depreciation by multiplying it with 3 and dividing it by 12. The next year, we have 100,000, the same cost, minus the total depreciation till year 2, 2,500, multiply it by 10%, we have the total depreciation of 9,750. Then in year 3, we have cost 100,000 same and accumulated total depreciation of year 1, 2,500, year 2, 9,750. So we have a total depreciation of 12,250. So by deducting it, we will get the book value and multiplying it by 10%, we shall get the depreciation of year 3, which is 8,775. So this was all about the diminishing balance method. Now let's move to the next, which is working our method. Okay, so now we are going to discuss about how to calculate the depreciation under working our method. Here we are assuming that we have cost of 100,000 and salvage value of 10,000. Total useful life in hours is 9,000 and the machine worked 4,000 hours in year 1, 2,000 hours in year 2, and 3,000 hours in year 3. Now, we have the formula to calculate the depreciation under working our method. Here we have cost minus salvage value divided by total life in hours. So, this formula is just to calculate the per hour depreciation. Now, here we have 100,000, which was the cost of asset, then 10,000 the salvage value, and divided by the total useful life in hours, which is 9,000. So we have 10 rupees per hour depreciation. Now in year 1, the machine worked for 4,000 hours, and by multiplying it with per hour depreciation, we have the depreciation amount of 40,000. Then in year 2, we have the machine which worked for 2,000 hours and the per hour depreciation was 10, so we have the depreciation amount of 20,000. And in year 3, the machine worked for 3,000 hours, and by multiplying it with per hour depreciation, we have the total depreciation amount of 30,000. Now that was all about the working hour method. Now let us move to the unit production method. Okay, so next is unit production method, and the question is same as before because there is a slight change in the formula of both of them, unit production method and the working hour method. So here we have the same question, cost is 100,000, salvage value is 10,000, total useful life in units. Now we have to see that how much units one machine can produce and how its cost shall be depreciated over its total useful life in units. So we have total useful life of 9,000 units and machine produced 4,000 units in year 1, 2,000 units in year 2 and 3,000 units in year 3. Here we have the formula to calculate the depreciation under unit production method, that is cost minus salvage value divided by total useful life in units. So we will get per unit depreciation. Here the cost is 100,000 minus 10,000 salvage value and divided by the total useful life in units, we shall get 10 rupees per unit depreciation. Then in year 1, machine produced 4,000 units and multiplying it by per unit depreciation, we have 40,000 of total depreciation for year 1. In year 2, we have 2,000 units produced by the machine and multiplying it by the per unit depreciation, we have the total depreciation for year 2, 20,000, and in year 3, the machine produced 3,000 units and by multiplying it with per unit depreciation, we have the total depreciation of 30,000. So this was all about the unit production method. Now let us move to the last method, that is sum of the years digit method. Okay, so here we go to the last one, sum of the years digit method, and sum of years digit method is supposed to be a little complex than other methods. So here we have the question. Cost is 100,000, salvage value is 10,000, the total useful life of an asset is 5 years. But do consider one thing, that we have to have the sum of years for the formula, so we will calculate it here. There are two ways to calculate to know what is the sum of years. So firstly, you can add all these in ascending order. Means if the life of an asset is 5 years, so you have to add 5 into 4 into 3 into 2 and into 1. So we will be having 15 as the sum of years. Or you can use another method, that n bracket open n plus 1 divided by 2. Now here n represents the total number of years, which are 5. So 5 bracket open, 5 plus 1, 6, and bracket close divided by 2. So we will be having 30 divided by 2, 15. So you can get the same answer by doing both of these. So it is up to you which one you opt. So coming to the formula, cost minus salvage value multiplied by remaining years of the total useful life of the asset divided by sum of the years. In year 1, we will deduct salvage value from the cost, 100,000 minus 10,000, and we'll be having 90,000. So multiply it by the remaining years. We are at the end of first year and the machinery is left over for 5 years still. So the remaining year is 5 divided by sum of years, which is 15. So we will get this year's depreciation as 30,000. Now year 2, 100,000 minus 10,000, and the machinery has been depreciated for 1 year and it is left over for 4 years. So multiply by 4 and divided by 15. Multiply by 4 and divided by 15. So we will be having 24,000. Now in year 3, we will deduct 100,000 minus 10,000, and the machinery has been depreciated for 2 years. Therefore, it is left for 3 years. So we will multiply it with 3 and divide it by the sum of years, and we will be having 18,000. So this was about the sum of years digit method, but there is one more thing, that when the months factor should be changed, if we purchase the machine in mid of the year, then how would we calculate the depreciation of that? That is a little complex than the other depreciation methods. So let us move forward to that topic. Okay, so while discussing the sum of years, we have a little change in this question, the question remains the same. As cost is 100,000, salary term is 10,000, total useful life is 5 years, and we have calculated the sum of years as well. But a little change is that we have purchased the machine in mid of the year on 1st of August. So as we have purchased the machine on 1st of August, so there will be a little change in the solution. What will be that on year 1, while calculating the machine depreciation, we have the cost minus salvage value, same as before, multiplied by the remaining years. Remaining years shall remain same as we are standing on year 1, and the remaining years are 5. Divided by the sum of years, that should be 15, multiplied by 5 months. Because the company produces accounts on 31st December, assuming that. And we have purchased the machine on 1st August, so we will multiply with 5 and divide it by 12 for making a factor of months to years. So by doing this, we have got the depreciation for year 1, which is 12,500. But in year 2, we have 100,000 minus 10,000 multiplied by 5 and divided by 15. Why it is so? Why the factor, why the remaining life hasn't been changed? Because of the shift of the year. Why is so? Because the machine was only depreciated for 5 months and it is still left for 7 months of year 5. Therefore, we shall multiply it with 7 and divide it by 12. Now, one question can arise that why haven't we deducted this with 12 over 12 by the whole year? Why is so? Because we purchased the machine on 1st August. That is why we only had 5 months in the last year. That's why we deducted. We didn't do it with whole of the 12 months. Therefore, we will borrow the remaining 7 months from this year and multiply it with 7 and divide it by 12. So we will be having the depreciation from this factor as 17,500. But this shall not be the depreciation, total depreciation of year 2, as 5 months are still left from this year. So 100,000 minus 10,000 multiplied by 4. Why is so? Because the machine has been depreciated for 12 months, 5 months from the previous year and 7 months from this year. Now the machine is left over for 4 years and multiplied by 5. Now why is so? Because there are only 5 months left, as we have given 7 months to the last factor. So we shall multiply it with 5 and divide it by 12. So we will be having a depreciation of 10,000. Now by adding both of these, we will get the total depreciation of year 2. Okay, so in year 3, 100,000 minus 10,000 multiplied by 4 over 15 and multiplied by 7 over 12. Why is so? Because the machine has only been depreciated for 1 year and 5 months. As we have seen here, 5 months, then 7 months, 1 year, then 5 months of the factor 4, and therefore we are multiplying it by with 4, dividing it by 15, and multiplying it by 7 and divided by 12. Then we have the depreciation of 14,000, and the year has not been ended yet. 5 months are still left. So 100,000 minus 10,000 multiplied by 3 over 15 and multiplied by 5 over 12. Why so? Because the machine has this year has only 5 months in it. This year has only 5 months in it. Therefore, we are just calculating the depreciation for 5 months in this year, and this depreciation shall be accounted for as the third year's depreciation. Okay, this was all about the sum of year digit method and the depreciations topic as well. So I shall see you in the next video with the new topic with the continuation of the same topic. So till then, you got to subscribe to the channel, you got to turn on the notification bell so that you may not miss a single notification of our channel, and do share it with others, and do suggest us what should be the next topic in the comment section. Till then, good luck.